We often get asked how we get paid. Well, there are several ways that an advisor can get paid. It can be transactional, meaning you pay a fee each time you transact something. So whether you buy or sell, there could be a cost attached to it. And including on transactional, there would be mutual funds, and there could be a deferred sales charge, but that is almost going to be going by the wayside. There's very few advisors that use the deferred sales charge, and in most cases, fund companies have done away with that. There could be a fee that's attached to buy, or you could actually just have a service fee that the fund company pays to the brokerage, and then the brokerage will pay the advisor. Those are all under the umbrella of a transactional type of payment. You don't always see that payment because it's kind of buried in the management expense ratio. And at the end of the year, you may see a summary of all the fees that you paid. But from month to month, you don't see anything. Now, there's other types of accounts called fee-based. And with a fee-based account, you're going to see more transparency because you will see exactly what you're paying up front on a monthly basis. The thing you have to remember, just because you see the fee doesn't mean you're paying more money from the transactional where you didn't get to see the fee. The advisor still has to get paid to give you advice. Otherwise, we'd be in the charity business and we wouldn't last very long. So just a little bit of humor. We do get paid. And so on the fee-based accounts, the fees can range for an advisor, usually somewhere between 0.75% up to as much as 1.5%. Now it depends on how much trading and work that the advisor is going to do and how large your account is to determine how much the fee will be. Now on top of that fee, there's also going to be some what they call hidden costs. And the hidden costs are going to be things like if you invest in exchange traded funds, there is a small management expense ratio fee that is in there. So it could range, say, 0.35, it could be 0.65. Usually it's fairly low, way lower than a mutual fund. So when you add your fee that the advisor charges and the fee that is on an exchange traded fund, you will notice that you will save on average probably about 0.5% a year. Now, if you have a large portfolio, that accumulates to a lot of money. So if your account is big enough, you would like to be on a fee-based account because for the most part, you will save. Now, there are other types of fee-based accounts where they're third party. There is a charge that you will see for the advisor, and the fee for the third party might be a little bit higher than if the advisor is actually designing and building the portfolio for you. So again, the range is going to be probably about 175 beeps to probably about 2.25. But once it hits about 2.25, you're getting up there to where it would be an average cost of a mutual fund. And with a mutual fund, you can set it and forget it for the most part, especially if it's a balanced fund. So even though there are some transparent fees or the non-transparent fees in a transactional account, you're still paying fees, and in the most case, an account with fees that you can see are a lot cheaper and more beneficial to you. But you have to ask your advisor how they're paid, whether it's transactional or fee-based. And if your account is non-registered, you actually get to write off those fees. So actually it's a good thing and you're paying even less. And the larger your account, for the most part, a lot of advisors will discount your fee on a monthly basis. But it will be there for you to see every month, and that is actually a good thing. So until next time, you asked, we answered. This is Linda Levesque with Levesque Wealth Planning. We'll see you later.